Okay, so right now I want to show us what you call zones in the forex market, trading zones. Now, there are good zones and they are not so good zones. Now, I'll just show you quickly with this example, an example of a good zone and a zone not so good. Now, in this case, bear in mind it's better to look in this particular situation, it's better to look for opportunities to buy because the market is clearly trending upwards. So now we have a 30 minutes turning point here. You can see we have a sell, we have a buy. Now, apart from that 30 minutes, 1 hour, we don't have a turning point there. You can see it just went through. On 30 minutes, we have sell buy. This blue, where I put the blue line there. Then on 15 minutes, we also don't have a turning point, or rather, the turning point was breached because we had a sell and a buy, but the next 15 minutes came down and broke the level. So we don't have it perfect. It's not a perfect special level because you want a situation whereby the level has not been breached. Now, but on 5 minutes, we'll find out that on 5 minutes, we have a turning point before the blue line. So we have sell, buy. So I drew a red line there for 5 minutes, then the 30 minutes line is in its own place. So now between this 5 minutes level, which was 2.416, and the 30 minutes level, which is 2.4155, it's just about 0.05 pips difference between the two of them. So this is what I call like a trading zone. In this case, this is not a good trading zone because if you were to trade this, meaning that when the market comes down and hits this, gets into this zone, you place a buy. The problem with this zone from my observation is that the weaker support comes first. The 5 minutes turning point comes first. If it was the 30 minutes that came first, that's a stronger zone. Now, upwards, we have a good zone, kind of. Because upwards, if we go to 30 minutes, you can see we have a buy, we have a sell. So I drew the line 30 minutes. Then 15 minutes is just above. So if I go to 15 minutes, we have a 15 minutes. So between these two places, like a zone of opportunity. Although for the upward one, the difference between the two of them is much. This is not the type maybe you usually want to trade. You usually want a situation whereby they are close to each other. This is a good zone in the sense that the stronger one came first. The 30 minutes level resistance came first before the weaker one, 15 minutes. So if the market gets into this zone, you can expect that at the smaller time frame, before it hits the strong one and goes to hit this weaker one, you will see a turnaround. Okay, so for the GU, this resistance here, you can see we have a resistance, buy, sell. So the 30 minutes comes first, and if you go to 15 minutes, the 15 minutes just comes a little bit higher. So this is like a zone. But in this case, since the market is going upwards, this is not a very good opportunity. It may work, you get, but since the market is going up, there are more chances that the market can actually push very much within the zone, and that will reduce your profit. But unlike this one that is lower, even though it's not a perfect zone, if the market comes into it, you have a better chance that it will buy and buy almost immediately. So that's for that. That's for zones, identifying zones in the market. Usually, instead of trading zones, I actually prefer you trade special levels anyway. But it's good to know the zones, maybe when you're just scalping and trying to make little money in the market.